Burberry has announced that they're going to stop selling exotic furs. The firm made the announcement during their earnings call, which was earlier this morning, to analysts and journalists, telling them that they're no longer going to be selling exotic skins, bowing to pressure from a number of groups that said the company should exit the sales of those exotic skins. Joining us to discuss the earnings further, Mayowa Ige, analyst with Financial Derivatives Company Limited. Mayowa, good afternoon to you. Thank you so much for joining us. What do you make of the... didn't we discuss Burberry in the third quarter of last year? I feel like we did. I'm trying to remember what we did. It was either them or I think it was Nordstrom's or one or two. But either way, welcome. What do you make of their performance?
Well, thank you for having me, first of all. I think it was an impressive performance, especially when we consider the last quarter and the lockdowns in China. And we know that Burberry has a specific focus on China, even more than its rivals, right? So regardless of that, they still posted impressive results. We saw revenue up about 23%. We saw adjusted operating profit up about 38%. And all this goes back to their strategy of making their products, or should we say, placing their product as an exclusive and pricey in the pricey premium segment, right? And we're seeing that it's paying off for them. We had full price comparable sales up 30%, and then also we saw their dividend. They had a dividend payout of about 47 pence for the full year, and all of this just shows that the year was actually great for them. They're going back to pre-pandemic levels.
What do you make? I think I saw in during their earnings call that they would they're going to exit mainline and digital markdowns. I guess, did that strategy pay off?
Oh yes, it definitely paid off. Right? There were concerns at the beginning when they came up with that would actually impact their sales, right? But when you look at it, what's their aim? Burberry, for about 5 years now, have come out to tell us that their aim is to. They've always been known as a premium product, but they've come out even in 5 years to actually say that they want to be positioned, even more positioned as a pricey premium brand, right? And that's been their aim. And so having the markdowns is against that objective, right? So exiting this is just in line with their brand strategy, and for them it has paid off. We saw that full price comparable sales increased by 30%. So at the end of the day, it worked out for them. They have other things going on for them that have actually contributed to increasing their sales despite the exiting of the markdowns.
You mentioned Asia, the emphasis on Asia. I think we've got a map. What about, I think they did pretty well in the US as well, as far as the regional growth. What other regions performed well for their sales?
Well, the US was led the growth. That was about, they had double growth from the previous year in the US. And then also China, South Korea, and I think China, they had about, I think it was about 81% up in South Korea from pre-pandemic levels. And that shows that even in that area, they are also doing very well. They actually also contributed. Then other regions like Dubai, it wasn't so high, but we're seeing that tourism in those regions actually have also helped their sales.
All right, and the brand, I think there's a brand rollout for a new store concept. So how's that working out?
Well, it's working out for them. They are now in about 47. They have about 47 stores for that, and they plan on opening about 65 more. But then I think that we need to look at Burberry as a brand. First of all, they are very into innovation. That's been their line. So this new store concept is not anything new. From as far back as 2009, they were the first luxury brands to have a Pinterest following, I think Snap Code, and they've been into leveraging technology. They even had this partnership with a tech company where you could spot fake Burberry products from the image, and it gave about 98% accuracy. So they have really been into that. So this new store concept is only in line with innovation that Burberry has always been about, and for them, they're already reaping the results. It's gained massive ground in China. I think they had the first store in Shanghai. It's already gained massive grounds that they've had in Sloane in the UK, and then I think the newest one was in Paris.
All right, and the decision to stop selling exotic furs. What do you make of that?
Well, it's what's happening now, there's more focus on sustainability as a business. All businesses are focused on sustainability now. And then when we look at what will be the key drivers for the luxury segment in coming years, one of it is actually sustainability, brands that are actually focused on the environment, right? So for them to grow, it's only right that they actually stop the use of these products, and other brands have already done it. So it's a step in the right direction, should I say.
And okay, so as far as the earnings guidance that they gave, because I think you mentioned Shanghai there, and we all know what's been happening over there. What about the headwinds that they're facing for the fiscal year 2023?
Well, I think number one is inflation. Inflation is affecting the whole world. We're seeing energy crises, and no country and no business is exempted from inflation, right? And then when you look at it, they sell luxury. It only means that, and inflation is eroding, luxury is actually bought by the wealthy. Inflation is eroding the wealth of the HNIs, right? Yeah. And so they'll be pushing their money more into real assets like gold, real estate, to actually hedge against inflation, and they won't be putting so much on luxury goods for now. And also when we look at China, for instance, I think they have what do you call it? Something about a combined prosperity plan, or something about the wealthy flaunting their wealth when they buy luxury goods. Yeah. So the country might actually crack down on the wealthy that actually go into luxury goods, spending into luxury goods so much in this time. So we might actually see a decline in luxury spending from that angle if this inflation crisis continues, and if we continue to see volatility in the stock market and even crypto.
So I guess can we use them as a bellwether for the rest of the fashion industry, looking at the rest of the year? What's your takeaway as to how the other players will Gucci and so on and so forth, Tom Ford and everybody else?
Well, I don't think that we can use them as the bellwether for every other thing, every other brand, right? Because I look at them, they are one brand, standalone. If you look at the likes of LVMH, they are a consolidated brand. They have other products right under them. I think those might be that might be a brand that we could probably use, but I don't know if we can use Burberry as the standard for the whole industry. But comparing the overall luxury space, I think that they're doing very well. Their revenue growth was higher than the expected growth for the luxury market in the past year, and that was about 13 to 15%, and this was 23% is definitely higher. But then I think we should look at all others and actually have a proper average and not just use Burberry as the standard.
Always great talking luxury goods with you. Mayowa Ige, analyst with Financial Derivatives Company Limited. Thanks for joining us.